So let's talk about the basics of commercial real estate. Why commercial real estate? So commercial real estate, think about this. Imagine waking up one morning in 5 years' time and realizing that you have built this amazing steady income of passive income from properties you've invested in over the last 5 years. Not just one property, but an entire portfolio that's generating revenue every single month. And while you're living the life of your dreams on your terms. Sound too good to be true? Well, it's not. It's totally possible and, in fact, probable if you follow the right steps. And today I'm going to show you why commercial is the most secure, predictable, and lucrative investment opportunities. Have a look at this. Okay, so now you might be thinking to yourself, why commercial property? Isn't it about just buying a building and waiting for the rent to roll in? Well, no. Not as simple as that. And that's why it makes it so great. Let's break this down for a little minute, okay? Residential property has its perks, but the big difference with commercial property is it's predictable. When you buy commercial property, you're essentially renting a business. You're renting to a business, okay? Not just individuals. These businesses are usually in need of longevity, long-term leases. They're often willing to pay a premium to stay in high demand areas and locations, depending on the type of business that they are, of course. But here's the real benefit. While tenants in residential properties might move after 1 year or 2 years, and you've got that turnover of make good and clean up and do all that sort of thing, in commercial, tenants tend to stay longer and want to stay longer, locking in a steady rental income for 3 years, 5 years, 10 years, 20 years in some cases. It's financial stability, and that's what you're after. Not just for you, but for your future. And bearing in mind, I always say in commercial real estate, this is not an investment for today. This is an investment for tomorrow, for the next 10 years, 20 years. This is a long-term strategy. So let's get down to the good stuff. Passive income. With commercial property, the money comes to you whether you're at work or whether you're on holiday or spending time with your family. You don't have to trade hours. You don't have to trade dollars anymore. You are just recouping the benefits. Here's how it works. When you own a commercial property, your tenant is paying you rent. The rent for the mortgage covers your expenses. And if you've done your due diligence, puts extra money in your pocket each month. And here's the kicker. Once you pay off the property, you're left with pure cash. This is what makes commercial property a game changer for building wealth over time. And that's why smart people, older people who've been doing this for a while, have got a pile of cash coming in on autopilot. Now, don't get me wrong, commercial property isn't a get-rich-quick scheme. It's a slow burn. But with strategic investing, it's absolutely possible to replace your active income with passive, predictable cash flow. How does this work? Well, let's look at it. Let's talk about future planning. The beauty of commercial property is that it's not just about making money for today. It's about setting yourself up for a long-term wealth perspective. The more properties you add to your portfolio, the more income streams you have coming in, and the more you can scale your investments. And you want to diverse your portfolio as well. So any of you who have spoken to me before, you'll hear me saying diversification is the key to a great portfolio. When you start investing in commercial property, you're not just buying real estate, you're buying your future. As your portfolio grows, so your cash flow and equity and your ability to leverage that growth for even bigger and more profitable deals are established. So when do you start? Start now. Let's talk about timing. I know some of you are thinking, I'll wait until the market cools down, or maybe next year would be a better time. But let me just tell you, I've been doing this for a very long time, for 35 years, in fact. And the sooner you start, the sooner you capitalize on the growth. Now, the market might not be perfect for it right now, but bearing in mind this is a long-term burn, it's a long-term strategy. The property market is always moving, constantly moving. And you want to make sure that you are buying the right asset in the right area. Sure, there are ups and downs, but if you wait, you're essentially missing out on years of capital growth, of market growth, of rental income. So the best time to start investing in commercial property is now. Do it now. I've bought commercial property at the highs of the markets, at the lows of the markets, in the middle of the markets, when it was doomsday and people were saying, stop investing. I carried on buying commercial property. And I can tell you, it's the happiest thing that I did. I just continued and continued to purchase commercial property and accumulate those incomes, passive incomes, as we go. The best time to start investing in commercial property is now. So if you wait, the price of properties keep rising because the markets keep rising. Do you know that statistically, commercial property is one of the only sectors that never go back? And you tell me, have a think about this. How much did your parents pay for their property if they did buy their property? In the 50s, 60s, 70s, 80s? Have those properties ever gone backwards? No ways. And they're not going to. So the earlier you start, the more you'll benefit from the long-term gains of property appreciation. So what are you waiting for? Get started now. And let's help you make your future secure right now. If you're new to this, don't stress. Commercial property investment seems very overwhelming, but with the right guidance and strategy, it's totally measurable. That is where Evolve Commercial Property comes in. We specialize in helping first-time investors just like you walk through each step with ease and confidence. I've been doing this for so many years. I do this in my sleep, literally. Speak to my family, they'll tell you. If you're wondering where to begin, I've put together a commercial property starter checklist. It's a simple tool for you to get started with all the basics you need to know. Download it and let's get you started and building for your future today. Now, in the next episode, we're going to break down exactly how to find the right property and evaluate it for the long-term growth and steady cash flow. So don't miss it. Make sure that you tune in for the next episode. I know many of you are thinking, sounds great, Mish, but how do I know if the property is the right one? Well, the secret to success in commercial property investing is due diligence. That's right. Do your homework. And if you've heard me speak before, you would have heard me talk about due diligence over and over and over. Due diligence is your key. It's non-negotiable. Without it, you're essentially gambling with your investment. If you don't properly research everything about a property, you could end up with something that doesn't generate the returns that you're expecting. So here's what you need to do. Research the tenant. Analyze the lease. Check the property's condition and evaluate the local market. This is especially important with commercial properties because you're buying into a long-term contract. If you don't do your homework, you could end up or even getting stuck with bad tenants, poor cash flow, or worse, hidden costs that eat up your portfolio. Key message is look at the structure of the building. Is it a sound structure? Are you buying an old building? Can you knock that off in your price, in your negotiations? Otherwise, stick to newer buildings with less work. What makes commercial property different from other types of real estate? If you've ever looked into real estate or residential property investing, you'll notice a few key differences. Tenant stability for one, because in residential, your tenants are moving over faster, 6 months, 12 months. In commercial, your tenants are more likely to sign long-term leases, 3 years, 5 years, 10 years. This means more predictable income. Higher returns. You typically see higher rental yields in commercial property compared to residential. So your return on investment is far better. Yes, your risks are a little bit higher, but with risks come the rewards. Capital appreciation. Nobody talks about capital appreciation in commercial. They think it's all in residential. Well, it is in commercial. So commercial properties don't just hold their value, they increase in value over time, particularly in strong locations with strong tenants. Unlike residential properties where tenants might move after a year or two, commercial tenants want stability. They want to stay there. They want to make sure that they sign a long-term lease, and that's why it creates financial security for you. Now, there's a lot of factors to that as well. In residential, you got to wait for the market to grow. And if you're lucky, the market will grow. If you're not, then you're going to stagnate. In commercial, you've got incremental increases, you've got market growth, you've got all of these factors that you can add to your bottom line to grow the value of your commercial property. Let's speak about the lease. It's important to understand the difference between a gross lease and a net lease. In a gross lease, the tenant pays the rent, but the landlord covers the property's expenses. Things like taxes, insurance, maintenance, all of that sort of stuff. In a net lease, now you really want a net lease, and depending on the type of tenant that you have, you can negotiate a net lease where the tenant pays for those expenses, typically taxes, insurance, maintenance. A net lease is great for landlords because it puts more financial responsibility on the tenant. And you probably find more sophisticated investments on net lease, not gross. You'll find a lot of small retail mom and pop are gross leases, where your more sophisticated acquisitions would be a net lease. When you're evaluating a property, make sure you understand the type of lease in place. It will have a big impact on your cash flow and your overall return on investment. Very, very important. Now, if that sounds very overwhelming, then don't worry. Revolve Commercial is here to help you. We've worked with hundreds of investors to help them find the right property, to navigate the due diligence process, and to grow portfolios. Whether you're just starting out or looking to scale your investment, we'll be with you every step of the way, guiding you towards the best investment decisions for long-term growth. Get ready to take the next step. Download our commercial starter checklist and let's get your investment journey started today. Well, there you have it. Commercial property isn't just about buying buildings. It's about buying your future. By starting now, you're setting yourself up for long-term financial success. Whether you're looking for steady cash flow, property appreciation, or both, commercial property is definitely the way to go. In the next episode, we're going to talk about how to find the right property, the one that checks all the boxes for long-term success. I'll walk you through everything from evaluating the location to understanding the lease terms so that you can make informed decision to set you up for massive growth. Thanks for listening, and don't forget to download the Commercial Property Starter Checklist. Go to the website revolvecommercial.com.au. There's heaps of information, loads of freebies, lots of YouTube videos, lots of links. And don't forget to go and listen to the podcasts where it's a wealth of information, various different speakers, and great learning. So enjoy it, and hopefully we get to speak to you soon.